Hi guys, it's Molly, and this is my money tracker report for the week ending August 11th. For bills this week, we had a credit card payment of $213. Our variable expenses, we had a $530.40 allowance for this week. Our variable expenses, of course, all go on to our primary Velocity banking card, and these are budgeted items that we have collected from 3 months of bank statements and 3 months of credit cards to see what our pattern of spending behavior is. And then we also add in those items like for this previous week, car maintenance, anything that we know is going to go onto that card. At the bottom of the page, I log in everything that is spent on that card. We use only this one card for the week. And at the end of the week, I total that up. So for the week ending August 11th, even though we had budgeted $530.40, we actually spent $432.48. So that gets logged onto the page. So we had the $530.40. We added $213. We knew that our income this week that we needed was $743.40. What we actually earned was $1,035. So when we take out the bills for this previous week of $213, we are left with $822. That entire $822 is made as a payment on my primary card on Saturday. So we do this week to week. And I want to go back here and touch on the bills this week because you may say, oh, well, that's easy. You can put extra money on your card because you made extra money. Well, there's a couple of different things going on here. So in my variable expenses, I have a budgeted amount. And the goal, of course, is to come in under budget because if I can come in under budget, then that's just additional money that I can put onto my primary card and pay that down. But there have been weeks where I'm over budget. Another way where I can have additional funds that go on that card is that when you look at the bills this week, I have a credit card payment of $213. A lot of times people will say, I understand how to do this if it's my primary card, but I have multiple cards. What do I do with those? Well, here's a prime example of what you do with multiple cards and how you can use this strategy to then apply extra money that you might not have thought that you had towards your primary card to pay it down faster. So, for example, what I actually had due this week was credit card 5, which had a minimum payment due of $133. And I also, at around that same time, had a car insurance bill due of $213. So instead of paying the car insurance of $213 and that credit card payment of $133, instead we use the car insurance payment as our credit card minimum payment. Okay. So instead of paying the two individual bills and having to come up with $346 this week, instead we call up the credit card and say, hey, we want to make a payment. We're not going to make the payment for $133. We're going to make it for $213. Okay. So ideally you're going to do this 2 days before that car insurance is due because credit card companies will hold on to your payment because they're getting paid interest on your average daily balance. So you want to make sure that credit card has time for that balance to go down. It doesn't always work out that way, but ideally you'll give it 2 days so that can clear. So again, you call up the credit card company, you make a payment, but not for the 133. Forget all about the 133. You make the payment for the 213. You wait 2 days, and then you turn around and you pay that car insurance with that credit card. Okay, 2 birds, 1 stone. Instead of paying $346 this week, we only had to pay the $213, and both bills were satisfied. Okay, I just wanted to make that clear because that is how you have additional funds. If you take a look at the case study that I did for someone, she was coming up negative every single month. And we were able to, just by doing this with her multiple cards and her bills, come up with an additional $950 a month that she was able to put onto her primary card. So it does not matter if you are on a variable income like we are, where sometimes you're going to make a little bit more. Now, come the winter, since my husband is a contractor, you may see there are some negative numbers there, but our heyday is the summertime. But even if you don't have that where your income is variable, you can always get the money from coming in under budget whenever possible. And I realize that's not always possible, but specifically when you are combining your miscellaneous bills with your credit card payments. And I know some of you may be asking, well, what about the interest? Well, what about the interest? I have this card over here, my primary card, that is charging me a ridiculous 32% interest. So it's costing me about $10 a day. When I started this in June, the balance on this card was $8,500. Okay. 32% interest is crazy. And so I am paying that one down so fast that any interest that's accumulating on any of these other cards is nothing compared to this one. So I went from a $300 payment on my primary card to a $162 payment on my primary card to I'm going to have this card paid off in less than 3 months. Okay. So last week, the balance on my primary card was $2,061.22. And then on Saturday, I made a payment of $822. So that brought my balance on this card down to $1,239.22. Now, this week, obviously, I'm going to be putting my expenses on it again, and I have that number budgeted. And again, ideally, I will come in under budget. I don't always, but ideally, I'll come in under budget. And so by the end of this month, this card is completely paid off. And then I'm going to go to the next card with the next highest payment and just rinse and repeat. And that's how we get this paid off so fast.